Good morning, everybody. John Holland, Senior Advisor Pinchin here. I'll be your moderator for this morning's session or today's session on financial implications of climate risk and building resiliency in real estate markets. We hope this webinar will help us clarify or help start the clarification process of how climate risk and related environmental impacts are impacting demographics, investment approach, and value perceptions of Canadian real estate. Our guest speaker, Dr. Erkan Yonda, will be focusing on demographic, financial, and market impacts, including the effects of climate events such as flooding, wildfires, and extreme temperatures on property values, and practical strategies for assessing how our buildings' susceptibility to climate impacts respond. Our session also provides practical strategies for building resiliency, offering insights into asset performance and adaptation to environmental stresses. We have three speakers today, and I'll give a brief summary of each before we hand the presentation over to them. If you have questions, please put them in the chat or the Q&A, and we'll try and answer them as we go. We are planning to go an hour and a quarter today, so until 1:15 Eastern. Dr. Erkan Yonda, our first speaker, is a prominent expert in climate finance and sustainable real estate. He serves as a director at Concordia University's Jonathan Weiner Center for Real Estate and Climate Risk and the Finance Lab. And his research focuses on the effect of environmental risks such as flooding, hurricanes, and wildfires on asset valuation, investment choices, and credit risk in real estate. He also investigates how green building certifications impact value of real estate and cash flow and the cost of capital. Dr. Yonda's work has been published in top academic journals and recognized with awards like the Nick Terrell Real Estate Research Prize. Additionally, he founded Rethink Quant, a consultancy offering real estate and finance analytics to industry partners, mostly in real estate, I think. John Runkle, second speaker, is a senior vice president of Pinchin, specializing in building science and resiliency with 25 years experience in building enclosure, commissioning, facade engineering, resiliency, and forensic investigations. He's led investigations both domestically and internationally, and he served as past president of the Building Commissioning Association, where John co-chaired the ASTM E2813 committee and contributed to key industry standards, including IIBEC's CBCXP certification, an arm of 511 guidelines. And he's published numerous papers on building enclosures. Andrew Epp is the national practice leader at Pinchin in building science and sustainability. He's got 25 years experience as a senior engineer and project manager. He's completed over 100 engineering assessments that's led to more than 80 projects spanning various building types in both private and public sectors. His expertise includes building performance, asset management, building certifications, and resiliency, with a strong focus on sustainability. He's a licensed PEng in Ontario, and he holds a PMP designation as a Bachelor of Applied Science in Mechanical Engineering from Queen's University. He's also a lecturer on building science and sustainability and project management at Lambton College in Sarnia, Ontario. Thank you to my speakers. Thank you to all of you for showing up. Thank you to Erin Lovely, my colleague, for keeping us online. And we'll hand the chair over to Erkan to start his presentation. Thank you.
Thank you, John. I think I can start. So thank you very much for inviting me and having me today. So I'll just show you kind of a piece by piece, different like pieces from different research projects, and I hope you'll enjoy the presentation. So let's start the presentation. Next, please. Yeah, so this is like a summary of what I've done for Canada in the climate risk side. As John mentioned, I kind of have a long history of working on green buildings and their financial value. But I mean, since the climate risk kind of kicked in and we started to realize that it's becoming an important risk factor, I also switched some part of my research to climate risk. And the major part of my presentation is dependent on two industry reports I've written in collaboration with Ecoton Partners. One is like the Nord effect, and the other is the breaking ground. So I'll show you pieces of information from these reports, and also some part of my presentation will be based on my academic research as well. So overall, there's a debate about climate change, but I'll show you some figures about how climate change evolved. But this is kind of a summary of what I will show you. So actually, we face rising heat and disaster exposure, and this makes climate risk as an important financial risk factor that we should not ignore. So we have certain risks, but now we have additional risk, which is the climate risk, and which is continuously evolving. So I'll touch up on that. Um, and importantly, as the climate risk and the disaster risk evolves, like we see more frequency of disasters, more financial damage. So this kind of brings us to a case that we are shifting where we safely live and invest. And this is like the one of the highlight of my presentation. So Canada is emerging as a net beneficiary both demographically and climatically, but this is at the national level. So I'll also show you some results of climate risk at asset level. So next slide, next item. Yeah, so of course there's an important investor question. I mean, since I started my PhD, this question kind of shaped my green building research and climate risk research. How does this translate into long-term returns and asset positioning? So that's an important question that we try to answer. Next slide, please. So this is like a picture of Canada and the US with respect to temperatures. So on the left side, you see the mean temperatures of Canada and the US from 1980 to 2000s. And on the right side, you see the deviations from these means. So how much we see at normal temperature increases or decreases following 2000s. And this figure is about for 2023. So on the left side, you see lots of red spots in the US. So the overall temperatures in the US are much higher than Canada. And you see lots of blue places, which kind of reflects the cold climate that we live in Canada. And on the right side, you see that some reddish places, which kind of reflects the increase in temperature. And you see some even more red spots in Canada, especially in the north eastern part, northwestern part, where actually if you go to the left figure, you see that they are very blue. I'll come to that point. I'll come to that connection. But overall, since you see many red spots on the right map, actually this reflects that we are observing heating in the world in North America. Next slide, please. And this is like another way of translating these maps or temperature changes. So what we do here is that we look into the number of hot degree days, which is the days that we observe temperatures above 30 degrees Celsius, and we count them and we compare with the previous historical averages. And you see that the red line for Canada is close to the zero line, which means that Canada doesn't observe much more hot degree days than its historical averages. But if you look at the US, overall, we see around 10 more days where we observe 30 plus degree days, hot degree days. And this is kind of a reflection of that US is experiencing more extreme temperatures than Canada. All the Canada is heating up. We don't observe much extreme temperatures for Canada based on this figure. Next slide, please. So we see heating, and I show you a couple of figures on how we see heating, and let's discuss like this heating results with kind of more disasters, high frequency disasters like flooding, hurricanes, wildfires, and so. And the important question for the investors is that do we see any financial impact of these more frequency disasters, like observing more frequencies for the disasters plus like do we observe any financial impacts of these? So Hurricane Sandy was a great experimental period for this, and there are a bunch of studies, and this is my work with my co-authors from Cornell, Penn State, and Maastricht University. And in this project, actually, this is the very first project looking into the climate risk in the office space. And these two figures show you the impact of being closer to the coastline in New York and Boston. So there are two important things for these two cities. So New York was hit by Hurricane Sandy, and it's kind of assumed to be the very first hurricane that really damaged New York. And Boston is a very interesting case. Boston is really closer to New York, but we didn't observe any damage. So what we do here is that we look into the coastal offices and how their prices evolved during this period. And importantly, if you look at the two figures, you see that there's a decline in both figures after 2012, and that decline reflects the amenity value or the dollar value of being closer to the coastline, where you are more likely to be hit by a hurricane. And we see that office properties, both in New York and Boston, have lost value or amenity value of being closer to the coastline due to Hurricane Sandy. And Boston is really important because you could claim that New York had damage, and maybe the decline reflects the damage of the New York offices. But in Boston, we also see an increase, which is more about the risk perception of the investors. So, and we look at in this project, we also look at the cap rates of office properties. And in both cities, we find that cap rates went up. So this translates into my first point that climate risk is a new risk factor and investors price this new risk factor. So next slide, please. And this one is a more recent study that I'm currently still working on, where we look into the houses in the US that are affected from wildfires. And what we do here is that we look into the probability of foreclosure of the mortgages for these affected properties and also the prepayment probability. And if you look at both figures, the left side in both figures is like the before wildfire period, and these figures reflect the differences of affected property, the differences between affected properties and unaffected properties. And you see that before a wildfire, there is no difference between the two. But after the wildfire, we observe that the foreclosure probability is going up significantly and the prepayment probability is going up significantly. So just to, I mean, foreclosure is very obvious, but just to explain the prepayment probability, so it kind of reflects that the homeowners after a wildfire decide to sell their property, so they prepay their mortgages earlier, most likely to exit those affected locations. So these two showcases reflect you that yes, climate change is happening. So we see increase in temperature. And maybe next slide can explain and summarize this, summarize what I say. Next slide, please, Erin. Yeah. So we see abnormal temperatures, temperature increases both in the US and Canada. And we also observe that there are climate financial impacts of climate risk in these affected locations. But these are at asset level. So I'll take you to another question where I wanna show you the demand impact or impact of climate change. So this is real at the asset level, at the granular level. If there is climate disaster, there are financial implications and negative financial impacts of those disasters. But I want to take you to the side where what happens with the demand side if we translate this to the humans' mobility. So do people prefer to move from one location to another, and how does it impact, especially Canada and the US? That's what I will show you next. So next slide, please. So this is you've seen the temperature figures, temperature impacts both for Canada and the US. So this is a joint Canada and the US study and analysis. Here, what we look at is that what happens if mean temperatures increases in the US county or Canadian census subdivision, or if abnormal temperatures are increased, or if you observe more abnormal hot degree days, or if there are more wildfire areas being affected. And the figure tells you that if the bars are on the left side of the dashed line, zero line, there's a negative and statistically significant impact. And if the bar crosses the zero line, or if it is at the positive side, then there's a positive impact. So if you look at all of these climate factors, we observe that all of them have a significantly negative impact on immigration. So if there is more abnormal temperatures, more hot degree days, more wildfires in a location, we see that immigration to these locations decline. So this is kind of a demand driver, especially for Canada and also for the US. So if there is like more climate impacts or change we observe, these locations attract less immigrants because of climate change. Next slide, please. So the previous figure was the combination of the US and Canada. And this one decomposes the two countries. And if you look at the US ones, like the US mean temperature, US abnormal temperature, US abnormal hot degree days, or US wildfire areas, all of the bars are on the negative side. So which means that US immigration to the US negatively impacted in those affected locations. But if you look at the Canadian bars, actually mean temperature is at the positive side, which means that there's even like heating kind of helps Canada to attract more immigrants. And if you look at abnormal temperatures, hot degree days, or wildfire, they all cross the zero line. So it means that all of these climate factors don't have any statistically or economically significant impact on the immigration to Canada. So overall, we can say that climate change negatively impacts immigration, but not in Canada. And we call it as the North effect. So why do we observe this? Next slide. So why do we observe this? Overall, Canada has colder temperatures. We live in a colder climate environment. So kind of the heating up in Canada brings those temperatures to more comfortable levels. So it's kind of the North effect. So if you look at the US map that I first show you, you see that like US has lots of um, high temperature locations, and heating in those locations bring the temperatures to even more uncomfortable levels. So that kind of brings in the impact. Additionally, if you observe more heating and if you go to the extreme temperatures, there's high frequency to have more disasters like wildfires, flooding, hurricanes or so. Okay, so if I translate these findings into kind of bringing you a taste of, okay, where should we invest in Canada? Based on these findings. First things first, like major metro areas like Toronto, Vancouver, and Montreal will continue to attract population and capital. So there is no change with respect to climate. So these locations are highly popular among immigrants. These attract immigrants from all over the world. And overall, we don't expect any change. So this demand or climate won't negatively impact these locations, immigration to these locations. So the demand will remain stable in these locations. But of course, I mean, if you go back to the Hurricane Sandy paper or, wildfire impacts, and there are many other papers in the academic literature, we continue to find that all of these climate events have negative financial consequences for the asset owners. So still interest city risk matters, and still like there is not much worry to invest in these major cities in Canada, but still you should be very careful about your granular asset, whether you are exposed to any kind of flooding event or wildfire event. And that part will be mainly addressed by Andrew and John after my presentation. And also, I said Canada is like a colder location, and heating kind of helps Canada. And based on our findings, we kind of expect that some colder locations outside these major metro areas in Canada could attract even more immigration. So if you think this way, like Ottawa could be a winner here. Quebec City, Halifax, or Calgary, Edmonton corridors are kind of in the positive side of these climate impacts because the heating up in these locations kind of bring the temperatures to more comfortable levels. So this could help these locations attract even more immigration. Next slide, please. And kind of we did an additional analysis on this. So we thought about, okay, Canada is very attractive among immigrants. And, we kind of show that the immigration to Canada is not negatively affected by climate change. So the economic side. But how about the immigrants coming from more exposed climate risk exposed locations? And economic from countries with negative GDP or lower GDP or negative economic situations. So on the left side, you see that all of the bars are on the right side of the zero line, and they barely cross the zero line, which means that there's a positive impact. So actually, we see what we observe here is that if a home country of an immigrant is more exposed to climate risk, there are more and more people coming from those countries to Canada. So Canada is kind of attracting climate immigrants. And if you look at the economic part, so you see that all of the bars are on the left side, which means that actually Canada is also attracting immigrants from lower GDP countries. So Canada has overall, if I combine these two findings, Canada attracts climate immigrants and also economic immigrants. So this is really important because this is kind of an economic resilience to Canadian economy, to climate change, of Canadian economy to climate change. And it's really important that Canada continues to have this advantage. So if you relate this finding to Canada's immigration status, we have an aging population, we have labor gaps, although current situation is different. I'll show you a couple of figures about that. So there are labor gaps, which make immigration essential to Canada. And in the end, what we observe is that climate change has a negative impact to immigration, especially in the US and some other locations. And Canada is kind of a winner. So climate change won't negatively impact Canada's real estate demand if we measure it using immigration. So overall, Canada's economy is resilient to climate change when it comes to real estate demand. Next slide, please. But right now we see a different story in Canada's real estate markets, right? I think you might have questions about it. I made another presentation last week on this to some investors as well. And overall, if you look at the current structure, the overall case is that we have declining GDP, we have unemployment rates, the government paused immigration. I'll show you a figure of government's projections. So kind of this impacted the real estate prices in Canada currently. So I think we shouldn't read the climate results independent of what's going on currently. So next slide, please. I'll show you what's going on right now in Canada. So this is the government's projections. So if you look at the figure, the dashed line is the Canadian population, and the green parts are the immigration to Canada. So this is kind of the average medium growth case scenario for reported by StatsCan and the Canadian government. And we see that, for instance, if you look at the pandemic years, we see like a very high increase in immigration due to the pandemic. And then this kind of created some kind of unemployment in the market because we brought in many immigrants in a couple of years, exceeding 1 million immigrants per year. And this is way higher than the Canadian averages. And then by 2025, so end of 2024 and for 2025, the Canadian government changed the immigration policy temporarily. That's important. Where Canada starts to accept less immigrants this year. You know, I'm a professor. We have limits with also international students imposed by the government. And overall, if you look at the dashed line, we see that we expect that, or the Canadian government expects that there's a decline in Canadian population. So this part is important because this reflects of the importance of immigration to Canada for the Canadian economy. Because if you don't accept immigrants to Canada, then we'll immediately start to see declines in population. And just because of that, the government is planning to bring back the numbers to around 300, 400,000 immigrants per year, which is kind of the natural national averages. So what does it mean? So it means that this year we see a huge decline in real estate demand, and it's kind of reflected into the prices. And if you look at the pandemic period, we see that there's a huge increase during the pandemic immigration numbers, and that created unemployment for Canada. So kind of we are in a correction period for this unemployment impact. And overall, we'll see that the immigration numbers will come back to the national averages, which most likely rebound the demand for real estate. So that's one explanation of what we see currently. And if you think about the tariff wars with the US, if you think about the GDP decline, the high unemployment rate, all things combined, this kind of create a negative impact on the real estate market. But is it temporary or continuous? I'll try to answer it in the next slide. So in another study, so this is not related to climate, we try to, and this is the second time I'm doing this, we are kind of improving the model and the model, the AI, this is an AI model result. The model projections is really improved. So we are improving the model continuously as well. So this is really based on government's immigration projections. So these are the Toronto price projections from our AI model. And what we observe is that kind of our model captures the decline in 25 and a little bit in 26. But after the immigration numbers rebound, we'll see that the prices will start to go up again. So this is Toronto. So the prices will rebound in the coming years with the correction in immigration and also the other factors such as unemployment or GDP decline and maybe the US uncomfort as well. So we expect that the prices will start to go up again because of the Canadian real estate demand. And next slide is for Vancouver. So in Vancouver, we see very similar results. So the decline is a little bit higher, larger in Vancouver due to that Vancouver kind of builds currently more than the national averages. So it's kind of reflected into the model's findings. But in the end, the Vancouver house prices will rebound in the following years with the correction in immigration. Next slide, please. So all things combined, what we expect is that the price we resume the prices in Toronto, Vancouver, and Montreal will resume the growth after like the pause that we observe currently, and even like increasing completions or so doesn't impact that much because Canada has huge excess demand in the real estate market. Right now, it's just people are very cautious of the economic conditions. So we expect that with the immigration rebound and supply constraints in Canada, there will be upward pressure on the real estate values. And next slide. So climate advantage that I show you, the immigration rebound, Canada kind of reflects sustained real estate demand and price growth in real estate. But this is the economic resilience part, right? So I also show you that at the asset level, climate risk is real. You have certain risks financially, and these have to be addressed, for which I'll pass it to Andrew and John to help you how to address the asset level issues of climate change. Thank you very much.
Thank you, Eric. And next slide, Aaron. Excellent content. Thank you. Everyone, as mentioned off the top from Mr. John Holland, I'm Andrew Repp, and I'll be presenting the second portion of today's webinar with my colleague, John Runkle. And we're going to focus on, as we title the section, Bridging Climate Risk, Dr. Yonder's theories, to building resiliency, to practical applications. Next slide, please, Aaron. So it's a rundown of what we're going to talk about for the next 45 minutes, 50 minutes. Explain to you what resiliency is and really in a Canadian context, as well as give you a very quick explanation of resiliency versus sustainability. The terms do get confused. Then we'll look at building resiliency, regulatory drivers, industry trends beyond what Erkin just explained for us from an economic point of view. And then we'll get right deep into the practical applications, how someone who is managing a property or properties in your care, how you can assess the risks that are surrounding us, how you can measure outcomes. We'll show you some examples of practical resiliency measures. So not just talk about them, but I'll explain some of what they are, how they work. Real simple, high level stuff. And then we'll wrap it with some lessons learned, experiences John and I have had, and how you could learn from what we've learned. And then I'll define, if there's time, some of the available initiatives at regional, national level. And then more importantly, we'll go to a QA and a discussion period. So let's start here at bridging that gap. Thanks, Aaron. As Erkin explained very, very well, climate risk is reshaping Canada and the real estate market. So you just saw a very concise and very thorough explanation of the financial impacts, the demographic impacts. Immigration is a constant in this country, and I've had the pleasure of working with Erkin the past few weeks to prepare this, and it's really had me thinking a lot about immigration, its importance here, and how we prepare for our country as it grows and changes. Resiliency, as we're about to explain, is the response, is what we need the built environment to do. We'll say it again, it's the end of the presentation, the verb, not the noun, of protecting people, assets, communities from climate events. As we know, none of this is new. The housing supply, we're very short. I even said a shortage of housing in Canada. So what we have already is precious, and we need to protect it. while also pushing to have more built. We're not going to talk about new construction today. This is all about the existing fleet. So what John and I will focus on for the next 40 minutes is connecting the academic insights from Birkin's presentation to action plans that you can put into effect for your property or properties. So we're going to run this first poll. Aaron, if we can put that up. I have a few poll questions. This will probably be the one we do today. I'd like you to ask or answer, have you or your organization experienced a climate-related building event in the past 5 years? Yes, no, or unsure. So we'll take 30 seconds for that answer. What I want to know is not just, oh yeah, it rained here yesterday, Andrew. No. I mean disruptions, leading to issues, panic meetings, loss of service, beyond the standard. It snowed a lot here. Okay, good. Thank you. We'll close it out. So look at that. If you can see the results, it was 71% of our attendees, and there are 30, said yes, we've experienced that. 70% of 30, everyone. We're looking at 2/3. So 2/3 of our attendees, and for everyone's insights, you are a collection of interested parties from across the country in different sectors. 2/3 of us have experienced that. And if we did that, that's, well, a small poll probably represents the country at large. Now let's explain to you why resiliency matters. Next slide, please, Aaron. So as we showed in part 1, climate change hasn't happened, it's happening. The extreme events, well, like as Eric can explain, we are in a good place in terms of immigration and investments. We still have these major climate events that are happening, and we can't be ignorant of them. They're happening across the continent. I'm going to talk about a few to remind you of the severity of these, and maybe you are familiar with some of these, either from the news or a personal experience. Next slide, please, Eric. We'll go back 12 years ago. The Toronto flood. You might remember this. It's a great photo. And by great, I mean impactful, strong message. This is the Don Valley Parkway. So that's the eastern side of Toronto. Look at it flooded. Look at the car at the bottom. So this was 12 years ago. Rainfall of 126 millimeters over one day. Massive flooding. Massive damage to infrastructure. Okay? We're talking closure of one major thoroughfare. Transit systems down. That's the importance here. So preventable, we'll talk. Next slide, please, Eric. Dorian, massive storm that impacted Atlantic Canada in 2019. Very strong winds, 100 millimeters of rain. Power outages. 80% of Nova Scotia without power for over 2 days. $155 million of insurance claims in Atlantic Canada. Insurance claims, important note, not the total cost of the storm, only what people have gone after. And my colleague, Mr. Runkle, will explain more about that shortly. Next slide, please, Aaron. We'll go a little quicker. The Barrie Tornado 2021, damage, high-speed winds, residents injured, homes damaged. Next one, probably the most impactful photo of the group. Aaron, next slide, please. Hurricane Fiona. This is Port aux Basques in Newfoundland. 20 homes washed into the ocean. 500,000 people without power, $660 million of damage, insured damage. So, ice storm was last year. Next slide, please, Aaron. A different type of event. And if you are a vintage like me, you'll remember the ice storm from 1999 in Eastern Ontario that plunged us into the cold for 5 days. So, next slide. Why does all this matter? So all of these storms were meant, and showing them were meant to take you backwards to remind you of the damage, the stress, the anxiety, the unpreparedness we had. These events are not getting fewer. We're actually expecting more of them. So while they are growing, so was our opportunity to lead in this space as a country as people within this industry. Resiliency planning is no longer an option. It's essential for protection of your assets and the people in your care. We're going to skip that next question. We'll go to the next slide, the resiliency versus sustainability slide, please, Aaron. And I'm going to pass it over to John Runkle to continue on. Thank you.
Well, thank you both. And it was refreshing to hear that it's not all bad news with climate change. So that's great. Aaron, if we can go to the next slide. We're going to do just a little bit of a study about what our building functionality is and what it meant to be resilient, or, the purpose of structures, as we take a little history lesson here. So if you're a mobile society, perhaps something like a teepee or something worked for you. Well, obviously the durability factor, resiliency factor be low, but the functionality high. And then you start looking at the Sphinx and castles, and even the way we build today, and you get to some durable structures. But obviously, when we look at today's structures with life expectancies maybe between 70 and 100 years, much shorter than the past, but also not what we're achieving with some of our climate change. Next slide, please. If we break it down to the physics of buildings, what you're looking at is that nature wants to reach equilibrium. And so we're spending a lot of time today talking about water and wind and so forth. And temperature wants to go from hot to cold, moisture wants to go from wet to dry, and pressure wants to go from high to low. And if we're looking at these natural disasters, often this challenge of nature to reach equilibrium is really what our enclosures are fighting. Next slide. So we put in walls and buildings and so forth to try to keep outside out and inside in. What we're finding too is that our occupants today are even more particular than in the past. I like to say that most folks have 1 degree of comfort level inside a building, and at any one time, someone's always too hot and too cold. Next slide, please. So and Andrew touched on this before, but we're going to talk a little bit about the difference between resiliency and sustainability. I think the one thing that's important to note is that sometimes, especially in the States, these can be political type terms. And I can tell you that natural disasters don't care how you vote. It will influence your property. It will influence your ability to live the life that you want to live, regardless how you vote. When we look at resiliency, it's really focused on preparedness and recovery and adaptation, whereas sustainability is more looking at the future and how to improve, long term, given certain environmental targets and so forth. Next slide. So simply put, the difference is while sustainability focuses on creating a positive future state, resiliency is kind of the pessimistic side of that, and it's focusing on the inevitable disruption. Next slide. So as you can see in this slide, a disruption, obviously, when you have water pouring into your house, which will be kind of what our case studies are focused on today. The questions that are important is what are the ability to withstand, what's your recovery time, what are your redundancies and so forth. And these are all key aspects of resiliency. Next slide. And next slide. We're going to look at some of the drivers of the industry. And we're going to start with regulation, and then we'll focus in a little bit more on the money side of things. So when you look at regulatory drivers, obviously these are codes and standards, National Building Code in Canada and Ontario and other local building codes have resilient requirements that are now being embedded in them and in some cases enforced. So the National Building Code of Canada has embodied carbon, that started in this year. And then you look at the Ontario Building Code, and now there's alignment with a whole bunch of National Building Code items also related to embodied carbon. And then the resilient measures are supposed to be expanded and included in 2030. And then in the United States, we've seen it really across the states in the areas that are hit hardest. So a lot of times changes to our building codes are influenced directly from natural disasters. So we're seeing that in California with the fires and correspondingly Florida with the floods. I would say that the biggest influence on our codes is natural disasters and responses to natural disasters based on poor performance of existing buildings. Next slide. So if we focus a little bit more on the dollar side of things, what we're really looking at is what is the asset value retention, right? And there's different costs. We'll talk a little bit about insurance in the next slide as well, but certainly you can have covered losses. You want to avoid climate-driven devaluation. So we started to see perhaps some influence on climate change and how that influences what your property values are in the first part of this presentation. And now we're going to look at it at how can it influence after you've sustained an event and so forth. When you look at the regulatory compliance, obviously you can have local communities that have been hit that will have additional regulations that could cost you real money to bring existing buildings up to compliance or prevent future losses. And then one of the biggest costs that is hardly talked about is, what is the value of time lost, lost downtime from a facility that you expected to be producing revenue, and it's the exact opposite, and it's just a cost center until it's back up and running. Next slide. So if we focus in on the insurance side of things, and this is a large part of our business, both north and south of the border here, what you see is that there can often be an increase in premiums, significantly increases in premiums if there's multiple events, which can make or break ability to pay leases and so forth. If it's on the residential side and impact certainly premiums on the commercial side as well. What we haven't seen yet is a direct linkage to mitigation, which we'll talk about here in a little bit, and the reduction of premiums. I do think it's on the table, and I think there's some other interesting different ways that we can insure things based on event occurrences in the future that may help increase or decrease premiums, depending on how much we are prepared or underprepared. Certainly payments on claims gets into lots of different challenges, including you might have to tear down the building or it might dictate substantial damage. What I mean by that is sometimes with certain jurisdictions, if your insurance payments eclipse a certain percentage of the total building value, you may have no choice but to tear down the building. We've seen this in Florida many, many times. Or it may first force you to do current code upgrades, which also make it financially untenable. Both obviously undesirable things to occur. Next slide. So, second poll question, if you could ask, have your insurance premiums increased due to climate risk? Simple yes, no would be great, and we'll give it a couple seconds to think about. So have you seen any increase in premiums that you think could be related to climate risk? And Aaron, you can go to the next slide as we wait for those results to come in. Maybe we can't. I might have messed up the survey, so I apologize if I did that from going to the next slide. So if all of these drivers, oh, here's the survey results. Okay, so either yes or unsure. So I guess that means the rates are going up and we're not really sure the reason, versus 50%, they've seen a direct correlation between the rates going up and a climate event. So, this is again apolitical. It's hitting us across multiple geometries or geographies, multiple climates, and we consider to see or continue to see insurance companies reacting to these payments. So, if this affects everybody, why are we not seeing this massive drive to making buildings more resilient? We're gonna get into that, but I think the short answer is it's not an easy problem to solve. It's a little bit abstract for a lot of folks to get their hands around, and it's not always obvious in terms of the path forward. You can skip 2 slides, Aaron. So what's at risk? Ultimately, in a lot of these cases, it's people's lives. So it's much more than property or livelihoods, which are also at risk. But the ability to rebuild and business continuity, community and relationships, and just basic functionality. All of these things are at risk with these weather events. Next slide. One concept that I hope we can let sink in today is the importance of time. And I think this was exemplified when you look at some of the fires that we had in Hawaii as well as California, and some of the recent flooding that we had too. Is oftentimes there's very little warning. And so when you overlay what's at risk and you overlay the limited time to prepare and get ready, it can be extremely concerning. The duration of the events is also something that's important. So how long you have to suffer, the downtime after event, the downtime to you're fully recovered and ultimately back in. And then the amount of time that takes you away from doing the things you'd rather be doing. All these things are very important when it comes to these events and the time that you have. Next slide. I took this slide on my street. This was in Florida, so just north of Naples, Florida. And I wanted to show you how quick the water can come up. This was from a tidal or storm surge from saltwater event. And that star is taken in the exact same spot, and the picture is taken 6 minutes apart. Now, one of it's looking up the street, the other's looking down the street. This was the moment that I realized my house was about ready to get flooded and had to react. But you can see how much water can come in just 6 minutes. It's shocking. Next slide. Other things that you don't think about too is when you're in this event, you are fully trying to react and trying to get things done. I will say you're not thinking about taking pictures to document it. And in my case, I wasn't thinking about where my car was parked. And by the time that I realized it was at risk, I had no choice but to pull it as close to my neighbor's garage as I could, and because I couldn't back it up into deeper water. Next slide. So one of the concepts that we're trying to do is we're trying to say, how can we take time that is presumably out of our control and put it into time that is in our control? And I think the two real important factors is the time that it takes until you have all your functionality back in terms of building systems, and the time that you're back to fully using and enjoying your property is really time that you can control if you're ready for these events. Next slide. We're going to give an example later on of one of the assignments that we did that we followed this new ASTM standard, which is ASTM E3429. This is a standard guide for property resilience assessment. And this is kind of hot off the press, but what this is a prescribed procedure to go through and determine not just what the risks are, but what opportunities there are to improve the results or reduce the risk to your property from a resiliency standpoint. Next slide. There's lots of tools as you get into this to help identify risk. And one of the tools that we've used effectively in Canada and training we've received is the PIEVC engineering protocol. And this is very useful again for identifying risks on a site-by-site and a site-by-site location-based perspective, as well as looking at time. So we know that the risk exposure can change over time. We also know that based on geography and other things that the exposures are very localized in some cases. Next slide. There's lots of other tools that we won't get into too much that show also can shed light to some of the risks that you can receive from a resiliency standpoint. And some of these are listed here. One more slide. One tool that we've used effectively here is a graphical representation, and it'll give you everything from hot and cold temperature risks, obviously wind risk, all the way to drought, flooding in this case. So what we're showing in this case is from a king tide perspective. So this is not even with respect to a storm. What is at risk in terms of water levels just from king tide when you start to project out to 2040 and 2060? Kind of sobering results. You can skip 2 slides there. So when we talk about defining success, and that's important, anytime that you have a property that's at risk, you have to first start with what is success. And I think too often we get hung up with what success we see in the media. In this case, this is media-defined success. This was a Tampa area hospital, and they installed this water barrier, and the water barrier did a great job of keeping the water out. The problem is it cost about $1 million just to set it up and 60 people for 2 days. And that's and the exposure really wasn't that great. They had about 2 to 3 foot of exposure for water. So that is untenable for most folks. Property owners don't just have, first of all, it's hard to get 60 people to do anything right before a storm. And also, $1 million in 2 days is quite a huge logistical challenge and financial challenge. Next slide. One thing to talk about is, do you have insurance or not? But oftentimes when you are filing a claim, that's already failure. And by the time that you put in a claim, you've already lost, in other words. But things to think about is, what are your deductibles? What are your damage? What kind of coverages do you have? A lot of the work that we do is wind versus water. And if you only have coverage for one or the other, that could easily affect your financial risk to the loss. Next slide. And then if you have a loss, it's typically a whole laundry list of unpleasant options for you, and in terms of flooding, which we're going to talk about today, you're either going to sell, you're going to do a substantial remediation, you're going to have to elevate your property, or just basically demolish it and start over again. None of which are cheap. Next slide. So when we look at defining success, what we're trying to do is we're trying to overlay a couple of different things is, how much water is on the outside, how much water is on the inside, and for how long can we fight this fight. Next slide. So we learned a couple things. I don't think my wife thinks she knows that, I don't think my wife knows that she is in this presentation, but there she is. She is showing you with her hand there how much water we got in our house during our first flood event. And then there was 2 subsequent flood events there with Milton and Helene of lesser degree. One of the interesting things to see is the center picture there is a picture of my neighbor's house. And this was a very short duration flood. So the water came up and it went down relatively quickly within an hour or so. And what you can see is, with no preparation, no mitigation, the inside water line, which is the red line, is substantially less than the outside water line, which is the blue line. So you get a little bit of resistance from doing nothing. But to get a lot of resistance, you have to do a lot of work. And that's what we'll get into. If you go to the next slide. So this gives you an idea, just from a residential standpoint, how much damage you can expect based on the amount of water inside a house. So, and I apologize, this is in inches, but a couple centimeters of water, and you're going to cut out about 30 centimeters of drywall. When you get upwards to about half a meter, now all of a sudden, most of your contents, appliances, and your house is on the front yard. And when you get into the 2 meter range, pretty much, if your house is a single story, is essentially gone. So what do we do with this information in terms of defining success? Next slide. This again overlays that concept of how much water is in on the outside versus how long the water is at peak elevation. So with river floods and so forth, you can have water levels be more than a day at almost peak levels. When it gets to coastal flooding, it's usually within a tide cycle, but we've had some that were almost at peak for about 7 hours, which is disastrous. And I think, what this slide is doing is, especially for our communities, is saying what is reasonable. So again, if you have a 1 meter exposure on the outside for 3 hours, you should be able to keep the water to an inch or two less within your house. Now, some of you might be thinking, well, if I do all this mitigation work, why isn't it 0? And I'm going to tell you that it's unrealistic to say that you're going to keep all the water house. We're basically asking to turn our house into a submarine, which obviously it was not intended to do. And I think that, when we are defining a successful outcome, we have to also be realistic. Next slide. I'll turn it back over to Andrew.
Thanks, John. All right, everyone. So that's been an hour of lots of thought, plans, theory. This last 1/3 of our presentation, I'm going to show you more hands-on practical things to get you familiar with, or show you some of the things that we could put in at any property, any building, any facility, ideas, so you can get your head around this concept. So let's go here. Next slide, please. So I'm going to talk about these in some broad categories of site landscape. We'll look at some building envelope ideas and then some ideas for mechanical and electrical. Scope of these can be massive, can be small. And then I'm going to pass it back to John to show you some of the things that he has implemented in Ford. So you're looking at here, everyone, this is called permeable pavement. Permeable pavement would be a great idea if at any time you are considering repaving a parking lot, redoing a parking structure. This is the type of material or a design for a roadway that allows water to permeate, basically flow through the hardtop, the asphalt, and then you can see under the top layer, we actually control it. So it would find its way into some pipes and then be routed towards the storm sewer. So this is just this is a different approach. You'll see often that these are generally more upfront. Obviously, this is quite a bit more expensive than a typical repave. However, what we want to do, John did a really great job explaining, is you want to balance. We need to consider balancing the cost here versus the cost of the flood that we haven't tried to mitigate or even allowed to happen because we just went with a straight asphalt. Next slide, please, Aaron. Permeable pavement, if we're looking at or considering the site itself, a site grade, an adjustment to the site grade, very, very simple. And this goes back to like when we were kids making sand castles. And we don't want the water from the tide to come in. We'd make a steeper incline or a wall. That's all this is. This is an image drawn by AI by me or with me a few days ago. I don't love the final product, but I think you get the idea. On the left, we have a situation where water is pooling on our terrain. Not where we want it to go. We want water to run off towards where it is controlled, the storm sewers, to ditches, to culverts, etc. So on the left, you see that. If we regrade it, you see that it should show that divot is leveled out. It shows the slope going up. Thank you. But the idea here is, you think you still get the idea. If we level that, regrade the terrain, then we can reinstall the drainage that was intended to happen. If you're going to consider this, not a massive, it's a lot of big equipment. Its impact is really quite good. It's very important to consult with the local building department. They certainly have a flooding plan, and you want to participate in that, not contribute to it. Next slide, please. So that was some ideas for site grading. Building envelope, where this is our sweet spot. So a few ideas of what can be done to protect a building, a house, a facility from flooding. Here I'm showing waterproofing. On the far right is the classic waterproofing. This is a bitumen. It is if you don't know, it's like warmed in a kettle. It basically, the closest thing I explain to it is hot tar. We slather that like we're icing a cake around a building, and then put in fill on top of it. So it is a solid layer, basically like a rain coat around your property. Good idea. Obviously, this building, if the building was standing, there's a cost of excavating, the additional cost of the process itself. The bottom left is the same idea, but with a weeping tile. Sorry, that's not me. Sorry. So the weeping tile is the same idea. So we've got a protective skirt, right? You can see that black layer around the building. And then the water itself, in typical waterproofing, we just allow it to flow to the groundwater. Here, we are directing the water. You can see that pipe right at the bottom. That is the weeping tile. Same idea as a French drain. So we have a tube in the ground, it has holes in it, collects rainwater, and once again, moves that to where we want it, not where we don't want it. Next slide, please, Aaron. Another envelope one. This has probably been done at most residences across Canada. certainly in Southern Ontario. But if not, absolutely worth considering a very simple job. This is a backflow valve. So most of us probably have this, but it's worth explaining. A backflow valve goes into the sanitary line in your home, in your basement, or your building. And what it does, in the top part of that image, you can see it has a flap that comes up. So that is really the backwater valve. It will slam shut. You can see it only opens one way. So it will prevent sewer water from backing up into your basement. If you have been in a neighborhood with a flood or in a community that's had it, this happens often. I'm recording here or broadcasting from near Sarnia, Ontario, where we have a neighborhood in Sarnia that has experienced really bad flooding. And this has happened a few times. So the storm sewers become overwhelmed with so much rain that the water will push out and will come back into someone's home along with some other rotten things, here depicted as rodents, because this is a polite environment, but the rodents, plural, and all their other bad things come back into your basement, and that is not a good situation. Backflow valves are great for everybody, especially in flood-prone areas like the Don Valley Parkway that I showed you before. Next slide, please. This one's phenomenal. The stormwater retention tank, or what I learned the other day, sometimes called the detention tank. Same idea as the weeping tile, a big tank buried underground to hold the flood water from your property. We're prone to flooding if we're in an area where we can't get it to a sewer line easily. This is just the mid step. So we fill the tank during a storm, and then you can see the tank empties slowly with, I see 1, 2, 3, 5 ways out of that tank. So some to the sewer, and we leach it slowly to the ground, controlled. Next slide, please. Those are some examples. If we're also looking at if it is time to do windows or doors or any type of exterior, there's always some things to consider. I think it's probably worthwhile mentioning that every building retrofit absolutely has both a sustainable component and a resilient component. Building envelope retrofits, we probably should ask the technical people involved, if we're doing insulation, what types are available, not just accept one. And you don't have to be a building engineer to know this, but ask, what are my options here in terms of cladding and insulation? Should we be focusing on something that's more moisture resistant considering where we live? Storm surge and wind resistance enhancements. If we've seen a lot of wind events in our area, there are other building retrofits we can add in to make sure the roof stays put, that fallout rest equipment stays put. Next slide, please, Aaron. Moving into mechanical electrical, this is simpler stuff. This is both take photos from John's property in Florida. Real simple. And we all know this. Electrical machines, anything with electricity, doesn't work well with water. So what do? If we're looking at a mechanical room, if we're in that kind of project where we might be replacing a pump or a motor, put them on a pad, a housekeeping pad. Not a ton of extra money, a few extra $1,000, but raising it off the floor 4 or 5 inches will save it in the event of a flood. You can see that's the pump at the bottom. The classic one, I think we all grew up for this with 80s movies and cartoons. There's the furniture, and John uses the engineers, the best tool engineering has ever provided, the Home Depot bucket. So his furniture is up. That's probably not quite a meter, but there it is off the ground. His furniture is protected. The floor might be damaged, but it's love seeing this section. We're good to go. Next slide. Also absolutely worth considering if you don't have it, whether it is residential, commercial, whatever you have. Backup power. Here I show you 2 examples. On the left, that's a home-based generator. You can see it's on a Look, it's on a pad outside. Runs off of a different fuel than electricity. So this one's probably either diesel or natural gas. So you want a separate fuel that isn't tied to the grid, and that can give your building either life safety power or full backup power. That's up to you to decide. On the right is the style we have here in Southern Ontario, many homes. And that's just a portable gas powered generator. It is very, very loud. It provides me with maybe a half a dozen outlets, but that provides 3 teenagers with their phones during a blackout. So that's a good balance. Backup power in a larger, if you are a property manager with a larger multi-residential building, you probably have one already. Absolutely important. We're going to talk about the importance of looking after your tenants in a minute. Next slide, please. Just another couple quick comments about other features you could add if you're looking at a project. And because I'm a bit of a smart aleck, let's talk about being active with passive design. There are things we can put into a building or in a project that are not functioning machines, but they're strategies that could, in the event that we've lost power, that we are relying on the earth to do some things. It's like cross ventilation. Can we put in vents across the building so I could open one another and allow air through rather than if all my windows were closed up? Glazing on windows. Glazing is a very important in-depth topic. I know it doesn't sound it, but considering what you're doing window-wise, always a great idea. Adding trees, expanding the tree canopy, always a phenomenal idea. Trees, the most natural source of cooling ever. They give us shade in the summer. They can help drink up some extra stormwater. And many municipalities, like the City of Toronto, City of London, have funding for you to access to add those trees. So if you're doing a project and it's underway, they won't just buy the tree for you. But if you have a project, you can solicit those funds and they will do that for you at no cost. Worth looking into. A green roof or a rain garden. Those are good ideas, good techniques. They have green roofs have suffered a bit of a backlash lately. Backlash is the word. But still a good concept to consider. Next slide, please. Final thought on the resilient measures. So I've talked all about the actual brick and mortar. Resiliency means, we've talked about protecting assets and your community. It means looking after your people as well. A new building. I used to work for the City of Sarnia for a period of time. Our new buildings, our new capital facilities we were opening always had a consideration for emergency cooling centers, emergency shelter spaces. We won't run this poll, but I imagine most of us received our COVID vaccines in a hockey rink. Beds lined up, right? So that building was converted to use it a different way. So we want to think about that too. Here's my facility. How could we use it in another way to keep people safe? Parts of the community, maybe not in our tenants, but others. So that means, what emergency power do I have? How do I keep this cool? How can I keep our people in touch with the rest of the neighborhood or the rest of the community? And then final slide for me, Aaron. Considering the people in your care, an engagement program, an information program, even just a newsletter, an email blast. So this is what we're doing resiliency-wise to let them know what exists is a big deal. Get those people, your tenants, your renters, whomever, involved in the planning as well, because they may have to live that plan when you are not around. Over to John for the last portion here on some of the measures he's experienced in Florida. John, it is 10 minutes after the hour.
Thanks, Andrew. So necessity is the mother of invention. And my necessity moment came after the first flood when my wife looked at me and she said, "Isn't this what you do?" Which was kind of sobering. And I said, "Darn it, I need to prove that I can do this." But what I found is, and you saw a lot of great examples from Andrew about ways that you can manage water on the outside. And that's good when there's a finite amount of water. But in the case of storm surge with an ocean, there's an infinite amount of water and there's no way to manage it. You can't push it into a different zone or you can't drain it away because the volume is infinite. So one of the things we started looking at is what are the commercial products that are out there? Now, had I gone with one of these commercial products and only these commercial products, I would have found that flood number 3 would have been about 10 centimeters over the product. In other words, it would have done no value whatsoever, and would have been, a huge disappointment. Next slide. Now they make different products, and we're not pushing any manufacturers here or anything like that. And some of them are kind of stackable where you can go up to higher elevations. But there's a couple other things, and Andrew brought up a great point about always being mindful of the tenants and the occupants. What we've seen in Florida is there's a very difficult permitting process if you want to do flood mitigation, because at the same time you need to keep the flood out is you need to make sure that you maintain egress from the building or the residence, whatever it may be. And that can be very difficult. For example, how do you get a wheelchair past this opening? And these are all things that must be well thought out and planned for as you're devising your mitigation strategies. Next slide. So the invention moment for me came where I realized that I was not going to be able to keep all of the water out. And I realized this during flood number 2 when I was inside the house and I saw that the leakage was not coming from the windows and doors where you would think it would come from. It was coming from somewhere else, and I have no idea where, like almost permeating up from the slab, if you will. So most of us are familiar with the sump pump. I doubt many of us are familiar with having a sump pump on your first floor or in your living room in this case. But when you've got to do what you've got to do, you can put a sump pump in, you can put a float valve on it, you can put perimeter drainage that drains into your sump pump, and you can use this for your backup, if you will. Now, you want to make sure you have a way to supply power, and some of the generators and so forth that Andrew showed are integral to this process. Next slide. And then similar to the backflow preventer, a lot of times what we will recommend for residential commercial clients is actually putting a churning ball in, which is in addition to the backflow preventer to make sure that you don't have that sewage upcharge in. One of my neighbors unfortunately forgot to block his sewer up, did everything else right, and had an outdoor shower that was connected to his house. And basically, because he missed one thing, all that effort was for nothing and essentially got completely flooded on the inside. The second case study I want to show you is a commercial property, and that's on the next slide here. It's about 16,000 people that live in this commercial property in Naples. And it was a kind of an interesting property because they had this raised elevated walkway, next slide, and it ran for over 2 miles. And this walkway, the thought was, could we turn this elevated walkway into kind of a dam or a dike so that we could protect the thousands of people that lived inwards of that from flooding events? Well, it was a novel idea, but there were several challenges with that. Notwithstanding the fact that many of there was holes, and as you can see, the example of some weirs where they allow the fresh water and the salt water to communicate through the walkway. Next slide. But the biggest challenge had to do with the community and the egress. And the fact was, when we did a LiDAR survey, what we saw is that the local community and the main streets for that community were at the same elevation as the areas that we're trying to protect around the side of the berm. So in other words, you can see with the big blue hours, we had these incredible flanking loss risks where water could just flow around our dam, even if we were successful at keeping the water out. So in other words, there's no purpose or point to turning this 2-mile long strip into a dam unless we could also work with the city and the community to raise the street up to at least the height of the walkway to turn that into an effective dam at that point. Next slide. So we're still working with that community on that aspect of it. And this is the same community. And we have, in the PRA, we did identify these 2 buildings. We're showing one of them here. These are coastal restaurants. So these are on the other side of the elevated walkway, if you will, right on the beach. And these communities have been kind of, these 2 restaurants have been hit hard with storm surge to the point where there was almost 3 meters in this restaurant. Next slide. And the interesting thing is these restaurants are really the crown jewel of the community. And the fear is that if these restaurants were lost, the local jurisdictions would not allow them to rebuild the restaurants. One of the interesting things is we have a program where we can look at that looks at historical influences over time. And you can see the loss of foliage, and this carries mangroves, and then also the loss of the beach, just in a few short years from 2016 to 2025. So right now we're working with these properties, even though they're large properties, we've already secured pricing to see if we can elevate them about 4 meters up in the air from their current position to help preserve them going in the future. So I'm going to turn it over to Andrew to take it home here.
Great, thanks, John. Everyone, 5 more minutes. No problem. I thought the same thing, Aaron. Give me 5 minutes and we'll get to your questions right away. Let's talk about some of the lessons we've learned, pitfalls to avoid. Next slide, please. I think we've made a very good point. We cannot underestimate the power of storms, importance of time. Water is very, very strong. It will do it at once. And we've seen many, John and I, and our teams, just people misunderstanding when a flood peaks, what water can do. Probably the biggest lesson learned our team would share with you is that the mistake people or others make is assuming they have time. And John showed that real well. Once the storm has happened, you're out of time. So working on these things today, when it's not stormy, when you have time to think lots of scenarios through, works. Some more right from John's presentation, make sure drains are sealed off. Make sure you have a plan to manage excess water, have backup power. Do not lock yourself out of the building. That's a story for another time from John. Or implementing measures that are just not sufficient. A flood panel that is just not tall enough for the amount of water. Next slide, please, Aaron. Our biggest, or probably most succinct lesson is don't be overconfident. Taking no action to protect your possessions and your property is just a recipe for disaster. Next slide. I will pass through these. I will tell you, just like the LEAF program, there are regional, national programs available that there is funding. Aaron, we're going to go to slide 93. And we would be happy to talk to you about those further another time. But there are regional plans already that exist that you could access some funding. So some final thoughts for you. Do the work. You can't take this. This cannot get enough attention. Consider what's happened, risk plan it, and remember that resiliency is a verb, not a noun. Get help when you need it. Our firm and those like it are happy to take your call and help out. You absolutely do not have to hire us to get some of our points of view on well, so this is how you do a permeable job. We are committed to the resiliency effort. We're committed to all the principles from this program today. Next slide, please, Aaron. To bring it home with a much nicer, positive point of view, it's not all bad news. When you look after things and you take care of your home, this is John's home at sunset after surviving 3 of the 100-year storms. It's a real beauty. And then I'll show you my favorite building. That's on the next slide. When we do the work, we get rewarded with wonderful things. Let's go, Blue Jays. And that will take us to our question period. I have some too, but Aaron, John, if there are any you want to, John Holland, all 3 of us are still on the call. So if there are questions, please let us know.
I have a few in the Q&A here that I'll read out for you guys.
Erin, excuse me, for time, just pick a couple, I think. Let's just pick 2, your 2 favorite, just given the timing. Thank you.
Okay. Climate risk assessment for company buildings is difficult due to lack of local risk assessment data. So it's difficult to develop adaptation and mitigation plan for building in a particular location. So can you give an idea how to assess local climate risk data?
John Ronk, you want to try it, or you want to have a go, or you want me to check it?
Yeah, I'll take a look. I mean, when we say local, I'm assuming we're talking about Canadian addresses. I think, unfortunately, right or wrong, what we've seen is some of the tools that we use regularly in the States are not fully functional in Canada yet. And
Mhm.
it's not that it can't be done, but it takes more time and it's more expensive. And what we're trying to do is we're linking publicly available data into the interface for the tool to give you the output to identify the risk for you. So the short answer is it can be done. It's slightly more expensive, and I think with the technology advances that we're doing, those problems will be solved, and that you will see in Canada very quickly that you'll have the same tools that we use and rely on in the States, and it'll be at the same price point. So I think that'll be within a year.
The common data set may not exist right now, but we have weather data. We have weather data for hundreds of years. So creating our own, what might not stand up to the rigors of a PhD defense like Erkin's used to, it is enough to say, look, we had these 3-4 storms the past 5 years. This is what we saw. Are we ready for what's happened in the past? That is better than nothing. But it is a great question. Next one, Aaron.
Okay. With climate-related immigration reinforcing long-term real estate demand, how might Canada balance economic growth benefits against potential infrastructure and affordability stresses?
So, Aaron, I guess this is to me. I mean, that's a great question. I think that's a question I hear all the time. I mean, not only with climate-related issues, but I mean the general immigration problem. When we wrote the first report with Ecoton, actually we were cited in the parliament by Polyev about our research. So, there's lots of politics going on. I mean, I try to give one single answer to this question. So, I mean, immigration, I mean, you've seen the population figure, right? So those are the government's figures. And if you don't accept immigration to Canada, we immediately start to see decline in population. And we need working age population for economic growth. So immigration is kind of a reality for Canada. But I always say, immigration policy is needed, but immigration policy should be matched with housing supply policy. So we bring in people to Canada. I mean, I'm one of those immigrants. But in the end, we need to provide shelter to these people. So that's very critical. So it's really important for the government to manage this, but also the solution is not only the government. So there is no such capital in any country to build up properties enough for the residents. And then, like, we have lots of immigrants also, like we have huge demand, and we already have excess demand in Canada. So the housing supply cannot match with the current demand, and we have to bring in more people. So I always say, like, we need the companies, property companies, we need developers, we need institutional funding, we need real estate investment trusts, and then we need companies like Pinchin to make our buildings more resilient to climate change. So it's really important that all these stakeholders come together and find ways to increase housing supply. So that's the critical part for Canada. So we have to build more. That's really important for us to move forward.
Okay, I think we'll close it there, Aaron. I think we've got over time. We've had really just an excellent presentation. I'm sorry to the people that had questions we couldn't answer. You can maybe address those directly to our presenters if you see the email addresses there on the screen. I'm sure they'll be happy to answer. Thanks to all of you for attending. Thanks to Aaron, of course, for keeping us on track and keeping us moving. And you'll get a brief questionnaire, participants, at the end of this if you'd like to fill that in. It helps us present these in the future online with what you're looking for. So that questionnaire will pop up or come to you in a private email after this presentation closes. Thanks for attending. Thanks to our speakers. Have a great day. And if there are more topics you'd like to hear, we'll endeavor to put those together with the same incredible quality and dialogue. Thank you all. Have a good day, and we'll talk to you next time. Thank you.
Thank you.
Thank you.